Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey everybody, welcome back to another live stream. Happy Friday to you. Hope you are all doing well, staying safe, and if you're in the northern hemisphere, hope you're staying cool. It's been hot all over the place. It's not been horrible in Georgia because we got a little bit of rain, but I just got back from Louisiana. It was hot as anything, but man, it's been a hot summer in some ways. I hope everybody's doing well. We had some Canadian employment statistics that came out this morning. A little bit of weakness in the Canadian dollar. Just to go over that really quick, we did get employment change that came in and it really missed. We lost 40.8 thousand jobs. I say we, I'm not Canadian, but the Canadian economy. Unemployment rate, however, did tick lower from 7%. I'm sorry, it was forecasted to be 7%, but it actually remained unchanged at 6.9%. So Canadian employment, a little bit soft here this morning. At the same time, we do hear from an FOMC member this morning, and we do also have Chinese inflation statistics coming out later on this evening after the markets close. So with that out of the way, let's talk a little bit about what the market is doing today. So if we take a look at some high-level stuff, you've got indices holding firm here to their gains recently. Take a look at the daily chart on the NASDAQ, and you can see that we have really held that level of support just shy of this 22,650 level or so on NAS 100. So indices continuing to stay firm, stay strong here. Stocks doing quite well here. And it's been pretty incredible. You've had all of this tariff worry, but the consensus seems to be, from my understanding, is that we are not seeing the sorts of economic damage that people had thought or expected from the tariffs that we saw imposed to trade partners globally in the last few months. Of course, we had the 90-day pause, and now we have tariffs sticking for many countries with the August 7th deadline that we got yesterday. And so you look at this and you say, okay, well, what happened? The world freaked out because they thought, okay, tariffs are going to rearrange everything about trade. It's going to get ugly out there. Stocks are going to have ultimately their profit margins hurt, which was the idea. Okay, if profit margins get hurt because, tariffs really hurt the prices that businesses pay, that consumers pay, you have to think if you raise prices on everything dramatically, that would hurt demand in some ways for products, right? But what we've seen instead is we didn't get the giant tariffs that we thought we were going to get, or I say the market didn't get massive tariffs like they thought. And then we got pretty much the announcement of tariffs, and then immediately the market started sniffing out that the Trump administration had no intentions to stick those high tariffs for very long at all. And so now, yes, we are going to get some tariffs, but it's not devastating numbers. And to the surprise of the market, we've also seen the economy holding up really well in light of this. So where does that leave you on the stage for stocks and for indices and for markets in general next? Well, here's the deal. Tariffs aren't knocking everything down, but the other side, the more positive side in the eyes of the market, is less regulation and tax breaks or cuts for businesses, right? While we may not get tax cuts per se. Any sort of tax breaks, things that get passed that can assist businesses, you know, basically not have to pay taxes on certain things, etc. Tax breaks in any format are perceived as very positive for stocks, because if you give tax breaks to businesses, that's more net income for them, and or more money that they can use to reinvest into winning the AI race, winning, etc. Right. So that's classic theory, I guess, for tax cuts for the businesses of America. Right. You make them more competitive. They have more money to spend, and hypothetically and hopefully they reinvest that money. Oftentimes, the criticism of that is that they'd end up just paying it out in the form of share buybacks, and that's where the adage of the rich get richer kind of thing is because stocks go flying, which stocks disproportionately favor people who have money already rather than people who do not. Long story short, it's good for stocks, right? So to me, you have an environment where I don't see substantial dips in the market, and if they do occur, they are likely to be bought. And in my personal opinion, if a dip occurs, I'm a buyer too. I think that's the natural path of least resistance, is if you get pullbacks, I think that the market finds a way to dip, not a nasty dip, and it gets bought pretty quick. That's my opinion. Something can always come out and shake things up. No matter what your bias on the market is, some sort of black swan event can take precedence over everything else and destroy every support level you have drawn on your chart. And that will happen at times. That's the challenge of markets, is there's the unpredictable nature of what if, Putin does something crazy, or, it can cause these all of a sudden drops that are very violent. So when I look at the indices, I've said this for, a couple weeks now, I am bullish on them, but need pullbacks in order to justify taking the risk. I don't see the idea being very attractive to buy stocks at these levels or buy indices at these levels. So I'm waiting for pullbacks. Taking a look at the dollar index had a bit of a false start. We've talked about this recently, but essentially the economic heat map, take a look at US economic heat map page here. We still have a very neutral reading on the US dollar. We had PMIs that came in very soft relative to expectations, not very good for forward-looking growth for the economy. So that's a little bit negative. You do have some positives as well. Retail sales were stronger than expected. Inflation is a bit mixed. You have some figures like the CPI coming in line with expectations. That's a bit neutral. The producer price index was cool. That's good for inflation, bad for the dollar, but good for inflation and for stocks. And the PCE number, which came in a little bit higher than expected. That is bullish for the dollar, less rate cuts, and bearish for stocks, less rate cuts. So that's the way to read this, right? So we're looking at inflation over here. We're looking at growth metrics over here. We're looking at job statistics and housing down here. So if we take a look at, for example, let's do some housing data. I'm sorry, some labor data. Wage growth, right? Better than expected, 3.9% compared to the 3.8% expected. People are getting wage increases that are outpacing, on an average index level, the rate of inflation, which makes people feel a little bit better. That's good for the consumer. At the same time, unemployment rate, right? Unemployment rate came in line with expectations. You had a forecast of 4.2. So all said and done, the US dollar impact based on this data is getting a neutral reading. That's the utility of the Edge Finder, is it automatically scans all this stuff and just punches out a bias. That's what a lot of our users and our customers who use our software, that's what they're after, is, just give me the kind of output summary of your data. And that is ultimately what is provided here, as well as what is provided with our top setups algorithm, which generates bullish and bearish readings for each of our favorite assets like gold, silver, currencies, commodities, indices, etc. So when we look at the top setups page, we're looking at it now. Let's talk about some of the bullish readings that we've got. We've got the Nikkei on top. We'll take a look at that. Take a look at gold, silver, euro dollar, euro Aussie. Let's see if we can find any trades today. It's been a couple days since I took a new trade because just nothing has been setting up here. So let's just look and see if we can find it. We'll walk through a traditional, Friday, what am I looking for setups wise, if there's anything there. Jay also says, hi, long-term viewer and recent Edgefinder buyer. My question is, from looking at the institutional positioning, how can the Russell and SPX be institutionally negative but still go up? Jay, that's a good question. So institutions, while they do make up a large amount of activity, there's still a ton of activity done by retail, by foreign investors that may not report to the commitment of traders data, and individual stocks. So these are, when you look at, here's another thing, right? When you look at the institutional data and you say, what are they doing with the S&P? This is not necessarily, these are SPX futures contracts, right? So they may be doing some trading on the short side, right? Maybe they own a bunch of stocks and they're off-putting it by selling some, shorting the SPX futures. It's kind of a hard way to quantify, since we don't have the individual institution that reported here, although that is something available within the Stockbox. I'll show you guys that in a second. I got something cool that I'm working on. In fact, I'll load that here just on the side. It's a little bit of a, we had, yesterday we had 2 people buy the Stockbox, which that is so exciting to us, because we're investing a lot of money into building all of our tools. But it was exciting that yesterday we brought up the Stockbox on stream, and we had some people immediately who were like, oh, I want to get a copy of that, which we were like, that is so cool that people are already picking it up. It's got so much room to grow and become such a beast of a product. I'm going to do something here. I'll show it in just a second, but let me just finish my thought here. So SPX, right? So they could be shorting SPX for multiple reasons, right? But we do see slightly more short positioning than long positioning. Recently, however, they've been adding more longs than they did add shorts. They did add shorts and longs, but they added more longs, right? So that's a slightly bullish lean for the week. Russell, to your point, more short positioning than long positioning. So remember that a lot of hedge funds, what they do is they're not necessarily like all in directional. They might be, for example, if we were to read this, they might be, let's say, long the NASDAQ, short the Russell, right? So that's a trade that institutions might have on. They might be long the NASDAQ, short the S&P, right? There's different ways you can do it. I bought the Edgefinder last year and I love it. Awesome. Appreciate you on that. So anyways, let's look at some of those top setups that I just mentioned, so I don't get too far away from what we were talking about. Nikkei is a bullish setup. Nikkei's running today. It's been a bullish setup for a while. I have not quite gotten a pullback that I was able to get in on. I was looking at this level here, didn't quite get to my level. Had we pulled back, I probably would have taken a long on the Nikkei. However, in the meantime, I'm still waiting. This thing has been hot, really, really strong. Nikkei's got some real nice legs to it here recently. A lot of foreign indices. How's the DAX doing? DAX is a little bit more choppy. Let's take a look at DAX is getting a bullish reading. So this is another one where, okay, I like the international indices quite a bit. So if I show you this really quick, guys, let's just mark our resistance level. On the DAX, you've got a pretty binary setup for me. Break and retest here, looking for longs, or pullbacks into support, looking for longs. Okay, so I want to show you guys something in just a second, because we are working on some other cool tools here at A1. For those of you who really like tracking institutional data, within the Edgefinder, right? You have the kind of aggregated commitment of traders data. Here it is. I'm going to show you something new that we have been working on behind the scenes at A1, and it is all about stocks, okay? So it's called the Stockbox. It's a new product. Well, I take it back. It's been around for over a year, but we've recently relaunched a lot of the features, and this thing is getting an overhaul, and we are investing a lot of time and money into making it a beast of a product, just like Edgefinder. What you're looking at is the institutional tracker. It's a new tool that has been recently revamped within the Stockbox. The institutional tracker allows you to look at institutional holdings. Now, this is substantial data, because this is more granular in some ways than the commitment of traders report. Many traders know and love the commitment of traders reports. Weekly, it's very useful for getting an idea of whether or not institutions are bullish or bearish on high level indices, right? So the SPX, gold, etc. But what if you wanted to look at the specific holdings of a particular institution? I've got a video. I filmed this last night, a video on this new tool. But to give you the high level view, we have just pulled up Morgan Stanley's holdings in their portfolio. How do we have that data? Well, it's public access information via the 13F filings. But just like the commitment of traders data, our goal is to show you tools that make things easy to spot. Our goal at A1 Trading, we build tools that help traders spot big flows of money, economic reports, financial data on stocks or for indices, commodities. That's our goal. We make data easier for the average person to use. So check this out. We have Morgan Stanley pulled up. We can look at the holdings of Morgan Stanley with our data visualization tool. We've got Microsoft as a big position, Apple, Nvidia, Amazon, and more importantly, we can actually see from the previous quarter to the latest quarter, the change in positioning for each of these, right? So if I go down the list, right, I've got all these different positions that they've got on. You can see things that they sold out of, right? So these are stocks that they sold out of. They sold out of their TLT positioning. They added a little bit to their Disney positioning. They added a little bit to their Accenture positioning, Salesforce, AMD. I know not everybody here is a stock trader, but if you're somebody who trades indices, this alone might be a reason to get a Stockbox copy. Because if you trade indices and you want to look at like the SPY, that's the S&P 500. You want to look at QQQ, that's the NASDAQ. You want to look at DIA, that's the Dow Jones. These players are buying and selling, positioning in this, and this gives you straight up institutional access to what they're buying and selling. Look at all the institutions that we've loaded in here. We have hundreds of institutions and their holdings tracked. Guess what? Coolest part, click this button, and now you've got the aggregated all of these institutions, what they bought, what they sold. Pretty exciting. So yesterday, we extended the sale for the Edge Finder. That's done. If you want the Stockbox, we'll do it here today. Just because this tool is lesser known than the Edge Finder, if you're an existing Edge Finder user and you want this is not the only tool within the Stockbox. We've got dozens, and this stuff is so cool. You can look at technical breakout screeners. We have financial data for stocks. I know this is a big plug for Stockbox, but if you don't have a copy of it and you're interested in it, existing Edge Finder users get huge discounts. Send us a message and we can get you 45% off for a limited time. Here's the link. Send us a direct message. We also do payment plans on the Stockbox if you need that. But grab a copy. It's really exciting how far we've come already with this. We're tracking institutions. We're tracking financial data. We have over 130 stocks with plans to add more stocks to the list. We're taking new heights to stocks this year. And I just launched a stock channel, which is also doing really well. So again, if you're a Forex person, look, I started in terms of active trading. I started in stocks, went to Forex, and now I do it all, right? So I kind of do stocks, Forex, indices, commodities. I do a little bit of everything. Stocks are something to add to the panel, if you will. Having stocks in your back pocket is really cool because some companies, you know, the beauty of good stock picking is that if you find the right stock, it can go up 300%. If you trade gold and you have a really good run, gold goes up 10%. That's a really good move. That's the difference in stocks to gold, is you can have massive returns on stocks. Of course, there's high risk like everything else. But you can have high returns with no leverage, which is why stocks to me are so attractive. With gold, if you want to make a ton of money on gold, you have to borrow a bunch of money via leverage in a CFD brokerage or with a futures, brokerage. You have to do leverage to some extent. With stocks, you don't have to use leverage. That's the cool thing. You can get big returns or big losses without paying for any leverage, which to me is why stocks are very cool. Okay, that's enough stocks. I know I've been ranting about them. I've got a new channel that I'm really excited about that's all about stocks, and it's getting a lot of views recently. So very exciting. I don't know if James, you saw that, but the video last night, I think it hit 5,000 views overnight, which is for a little channel that we started a month and a half ago or 2 months ago. That's exciting. People like stocks. Who knew? Anyways, more to come on stocks for sure. Gold, still very range bound, very not exciting, at least for now, right now. I'm looking for gold longs, but I want to see a breakout on this and looking for that. Also, and what I meant, like, okay, so gold has a massive run, and it was 18%, right? That's a huge move for gold. Like a very outsized move for gold is 18% return move. Look at Meta. Meta from the lows to the highs up 59%. Look at this one. Robinhood Markets from the lows 270%. With gold, you're talking about a huge move being 18%. With stocks, you're talking about hundreds of percents or tens of percents. Very volatile. You can lose a lot of money in stocks, just like you can lose a lot of money in gold or anything else. But the volatility is something that's attractive to traders who know how to harness it. Volatility is only scary if you don't know what to do with it. Volatility is as a good thing if you know how to use it correctly. Here's the stocks channel if you want to use it or check it out. Trader Nick Stocks on YouTube. And very exciting stuff. So it doesn't mean, however, that I have any less interest in trading gold, silver, indices, etc. Don't hear me incorrectly. I'm just excited. It's been like something that's been like genie in a bottle for me for years. I love stocks. I've traded and invested in stocks for years, but my channel here has always been a little bit more focused on, currencies, commodities, and indices at the high level. And I'm feeling really excited and kind of a rejuvenating content creator spirit because now I can talk about literally everything I want to talk about in the markets, which includes stocks, where I put a separate channel, since most people on this channel are just not really as interested in it. If you are interested in it, like I said, find me on that channel. Do you need a big account to trade stocks? Absolutely not. One of the cool things with stocks is you can trade with $15, $20, right? I wouldn't necessarily recommend it if you're trying to, trade aggressively on it. But the cool thing is it's not a leveraged market. You don't need leverage in order to participate in stocks. I'll give you an example. Let's say you bought one share of Apple. One share of Apple takes $220. So if you were trading Apple, it's $220. That's all you need in your account to use no leverage, and you can buy or sell the stock, right? It's very different than Forex, where with $100 or $200 in leverage, you're likely just going to blow that over and over and over, right? But with stocks, it doesn't take so much. Now it does if you are, buying more expensive stocks or you're using options. You can, blow your account to smithereens very easily. But again, leverage is not even needed for a lot of stock stuff. What's your recommended amount, Nick, to trade stocks? A couple $1,000 minimum is my opinion. I mean, with Forex, it's similar, a couple $1,000 minimum. So, yeah. Anyways, let's take a look at the dollar index. I talked a little bit about this. Let me see what else is on the radar. So silver and gold are both bullish readings. Is silver breaking out nicer than gold right now? Not quite. I'm looking at silver as the same concept. I'm looking for a break above. I'm looking for a pullback in and moving higher. And let me just reiterate, guys, I in no way am discrediting my love for trading gold, silver, the NASDAQ, euro dollar. I love trading these things too. It's just the excitement about also being able to now express in more detail what I do in stocks, which is a lot of options trading, a lot of, pseudo active investing to an extent, like buying a stock and maybe holding it for 6 months to a year and then selling it, etc. Euro dollar is also getting a bullish rating. Let's take a look at this one. So euro dollar, for me, would probably be more interesting if we were to get this thing coming back into this area. I'd probably be a buyer. I do think euro dollar, at least for now, path of least resistance is higher. The other scenario for euro dollar that I like would be a break through these highs. So scenario 1 is a breakout retest. Scenario 2 is a pullback into this area of support. In both situations, I'd be a buyer of euro. What would also be open to the idea of saying, okay, I'll buy euro here, try again here, try again here. As long as the fundamentals still align, I would be interested in dollar cost averaging on euro dollar. But I think the path of least resistance for the euro is maybe sideways for a little bit, but higher overall, as long as you still have the fundamentals, right? So as long as I still have this bullish reading, economic data, technical data, sentiment data, as long as this is leaning bullish for euro dollar, that's still a setup for me. But I'll have to keep an eye on that, because if that changes, then no more bullishness, right? Euro Aussie, let's take a look at this one. Euro Aussie, Euro Australian dollar, sort of choppy, range bound here a little bit recently. Let's clean up this chart. So we've got some resistance just overhead. Would be interested in similar scenario to the euro dollar, a pullback into support here would be interesting, or a break and retest of either caliber. Both look interesting to me. All three of these scenarios look interesting to me. Would like to see this level either get broken decisively, or if we just chop down to the bottom end of this range, I'd pick it up there personally. Again, not financial advice ever on my channels, just what I'm thinking. So I'm looking at that, possibly buying maybe in that 176.70 level if that were to come into play. Like I said, as long as Edgefinder continues to have that bullish rating. If it doesn't, then probably not interested. DAX and NASDAQ, we already touched on them, but I'll just give a recap here. NASDAQ pullback to 22,700 looks interesting to me, that previous level of support where we bounced off of, but more so would actually be more interested if we were to get a pullback down to the 22,100 level. I've talked about this several times on the channel. 22,200, 22,100, that area looks more attractive. That's a previous all-time high that we broke out of and haven't yet to retest. We may never retest, but if we did retest, that would be an attractive entry point for me personally. So I'm long biased on NAS. Let's take a look at the DAX. DAX, very simple, clean-cut chart. Should follow in many ways what's happening with the euro dollar, right? If you get a breakout here, that looks interesting. If you get a pullback here, that looks interesting to me. Right? So interested in longs on all of that list there. Nikkei I talked about earlier, looking for a pullback, same story. Let's talk about bearish setups. So bearish setups here, let's talk dollar Swiss. So if I take a look at dollar Swiss franc, bearish setups here would definitely lean bearish at current levels here. Let me just take a look. So dollar Swiss sentiment score is really what's costing it here. So what that's going to tell me is that retail is very long on dollar Swiss. We can pull that up. Market sentiment, retail sentiment. Let's go major currency pairs just to keep this simple. Dollar Swiss franc is getting very strong preference by retail traders, which are very long. So retail is really long on dollar Swiss franc. That gives me a contrarian bearish signal, which I think is in line with the big picture downtrend that we've seen in recent months. The Swiss franc's really strong this year. I wouldn't be surprised if it continues. The only thing I don't like about this currency pair on the short side is it's very costly to hold short because you are paying a very high cost to holding a short position on this currency pair. Why? Because the US offers 4.5% interest. Switzerland, what is Switzerland offer? Am I wrong, or is it 0.25%? Am I wrong on that? I may be. I may be wrong on that. 0.25%. So essentially, when you are short this currency pair, you are paying this in interest and you are receiving this in interest. That's what swap is. That's what the currency, kind of oftentimes trends in the direction of interest rate differentials. So in this case, the Swiss franc is actually, I'm sorry, what I said just doesn't make sense in the last second. So what I meant is that most of the time, currencies tend to favor the higher interest rate or drift in that way. But Swiss franc has been so strong this year that it's actually kind of gone counter to the interest rate differential. So it's actually moved lower, whereas the US is paying a higher interest rate. So we'll see what happens there. But dollar Swiss franc, again, short side is very expensive. So that's probably one I would just skip just because I don't like paying that expensive swap personally. But technically looks bearish. Aussie yen, let's take a look at Aussie yen. same story, very expensive currency pair to hold short. Also, technicals kind of look strong here, so probably a skip for me on the short side. Euro yen, Euro Japanese yen here. Really strong technical chart. Probably wouldn't short it myself. Pound Swiss franc. Let's take a look. I know I'm rapid firing currency pairs here this morning. This chart looks bearish, but again, being short the Swiss franc, long the Swiss franc is just a very costly trade due to very negative swaps. So I'd probably skip it, but it's a good technical downtrend. And I would not be surprised if this thing does move lower. I just don't have a strong enough conviction to take that trade. Same thing with dollar yen, pound yen, right? So if I am looking at, dollar yen and pound yen, I do think you're at the upper limits of these ranges. I would not be surprised if we did see a push back down to the lower end. Same thing with pound yen, right? You've touched into a longer term level of resistance around that 200. I wouldn't be surprised if we moved back lower. So we'll keep an eye. I mentioned it earlier. For those of you guys who have been sticking around with me on the Stockbox, the new institutional tracker is now available. If you don't have a copy and would like a copy, we'll drop a link here, just a quick second in the chat if you want to send a direct message and get access to it. And the other thing I'm just going to quickly mention too is that if you're not in our Telegram channel, we're going to be doing a giveaway on some stuff here pretty soon. All of the details for that giveaway, we'll be giving away a copy of the Edge Finder for free. If you want a chance to win, step 1, join the Telegram channel. Step 2, we'll be dropping the Edge Finder giveaway information shortly inside of this. Interest rate is 0. Thank you very much for that, Xavier. Yeah. Join the Telegram channel. We'll drop the link here in the chat. We're going to be doing some giveaways. There's also tons of free value in the Telegram channel. So we'll have that linked in the chat here in just a second. So join the Telegram channel. Up next, we have Extra Hot Forex or Kenzo joining the stream. I'm not sure if Kenzo is going solo or not. I'm going to imagine we're staying on with him, but stay tuned. We'll be right back with Kenzo just after this. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Weeble. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Weeble is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. What's up, Kenzo? How's it going, man?
I'm doing great, thanks. And you, man?
I'm good. Where are you calling in from? You're in the car. Is it cold there?
Yeah, not really that cold. Yesterday it was, but today not really. So I was actually on the way, so I just parked on the side, then I can join the meeting.
Hey, awesome. Well, I appreciate the dedication to coming back and hanging. So, what's the latest with you? What are you currently looking at in markets? How are you feeling? I haven't spoken with you in a couple weeks. So, what have you been thinking about?
I think I was still on the indices. They were moving very nice. We had some ups and downs, especially from the tariff. But likely enough, they did recover, especially this week. The market was just recovering. And gold was not really moving that much, but it was also better because it was just recovering from the lowest moves that we had. So on the other ones, the currency pairs, they were also performing very well. Euro USD, GBP USD, they were also performing very well, but most likely they were bouncing back. Remember last week we had these crazy sell-offs, so now the market trying to recover.
Very nice. Yeah, no, it's been an interesting couple months. We've had just a persistent uptrend in the indices, like you mentioned. Gold has been really choppy. Silver, actually, in my opinion, looks a little cleaner than gold even in recent times. It's been trending to the upside a little bit more so than gold, which has just been choppy and range bound. I guess first on the indices, how are you playing them? Are you in trades right now? Are you do you think that they can keep running? Do you think they're overbought? What are your thoughts on them?
For now, I'm out. I took a little, some few buys when the market was a little bit lower. But now I think, especially Nasdaq, it was very closer to the resistance, even though it reversed. But again, it's back towards that resistance. So I can say it's for technically it's overbought. But when we check earnings that we had a few weeks, or last week, they were
Hmm.
not really that bad.
Yeah.
Unfortunately, the tariff thing might disturb that, but I can't say it's overbought. Yes, technically we can say the market is on the highest level, but when we check the situation, whatever that we see, I saw Nvidia they resumed to to sell their chip or their graphics or their AI chips to China, H2
Hmm.
whatever. So that is going to boost Nasdaq, US 30 in general, or let's say US, because it seems like there is like lowering of the restriction towards China, and that it's the biggest customer. That in
Sure.
general is going to help Nasdaq actually, not only Nvidia. So that's the thing that I think it will move very nice. And maybe I think we did not really see some serious push because they, even though they were going to resume, I think maybe month end or something like that. So that will push the market to move very nice.
Yeah, it's really in terms of the indices, the biggest trend that seems to be so dominant for indices and whether they can keep going higher or not, it still remains the AI
Mm,
story. It's the question of, are these big companies going to continue to pour money into buying AI infrastructure, right? Because it is a big movement, right? So, in fact, I got to show you something, Kenzo, because I think you might enjoy this. I think you might find this cool. Um, we've been working on another product. I got to send this to you, but it's the Stockbox, and it is all about companies and financials and individual, because sometimes we talk about individual companies like Apple, we talk about Amazon, and how those things impact the indices. A lot of times when you come on, we end up spending a lot of time talking
mm,
about indices. So, like when I look at this, for example, I've selected for Apple here in the top right. And what we're reading here is their earnings per share compared to forecast. So, just like with an NFP report, we can get those stats and we can say, how strong was the jobs or weak was the jobs compared to expectations. We've done the same
mm,
with stock market earnings. So, we've selected for Apple. And what we can see here is that Apple, the earnings per share estimate was $1.43 per share. That was the earnings expected. And then what we actually got was $1.57. So Apple put up some strong earnings. And so when we
mm,
talk about the indices and whether they can go higher or lower, we talk about all this stuff. Is the Fed going to cut interest rates? Is there going to be some sort of peace in the Middle East or peace in Russia and Ukraine? Like we can look at all those things, but ultimately, the most important thing is whether or not company earnings are doing really well. And so here's another one.
mm,
Amazon, another giant company. Amazon put up some rock star numbers. The earnings per share estimate was $1.33 per share. What actually appeared was $1.68. So to
mm,
your point, to your concept here about um, earnings beating, right? You can't look at the indices without understanding, are companies at the highest level, the big companies in these indices, how are they performing relative to expectations? That's what it's all about. So, we can go
mm,
down the list. Another one that absolutely smashed expectations was Meta. Take a look at Meta. We have $5.90 expected per share.
mhm.
What did we get in the quarter two numbers? We got $7.14. So
Yeah,
a
that was a
consistent
gap.
beat here. Yeah. So just to your point about strong earnings, they matter a lot, and keeping a close eye on them is really important because it justifies whether or not the stock market can move higher or lower.
Yeah, I think the data that you show in there, maybe before you skip that,
Yeah.
yeah, that is like clear. I think whoever was trading indices, especially for those who maybe are still new, even if you are not new, I think this is the type of information that everyone wants because sometimes it's difficult to know or to find all this data on the same page. To know if Microsoft is displaying their earning previous, all that, and it's difficult just to find everything clean as that.
Yeah.
Plus, if you trade those indices, it means you actually trading those companies. And if you trading those companies, you have to understand what's really happening behind those companies. Are they earning or are they making money or not? So it's not really all about the fundamentals that we talk about Ukraine or something, because the
Right.
earnings actually hold these companies. Are they
Yeah.
performing very well or not? And we also have these external fundamentals that we talk about them every day. So yeah, that is clear data. I think that data worth more than whatever that you present it. I think it's worth more.
It's important to understand earnings because
Mm,
something happens in the Middle East, right? This is something that sometimes very much confuses traders and investors is they say,
mm,
how can the stock market go up when something bad is happening in the Middle East? Well,
mm,
what we just looked at, that's how. The market trades on earnings more so than anything else. So if you want to talk about,
mm,
yes, GDP statistics matter and PMIs matter and inflation matters and all that stuff is, but data on earnings is also very, very important. Now, the reason GDP and inflation and interest rate cuts, the reason those matter, by the way, to indices is because they impact earnings, right? They impact whether or not.
mm.
So these are like the final report card numbers for stocks. So I think it's really important that if you trade indices, you have your finger on the pulse. Also, Kenzo, I've just wrote down in my notebook to send you a copy of the Stockbox so that you can check it out and play around with it because I'd love to get
Okay.
your thoughts and feedback just because we talk about that often, but having that data in front of us, I think, is really important for understanding, hey, are companies beating? Are they missing? How are they doing in terms of their earnings? And having it in one place, like you talked about, is really what we're after with building that tool. You mentioned gold also. So gold has been really range bound here the last few months. It's been kind of like
Mhm,
watching paint dry here in terms of a bigger move. Now you've had some recent moves. You've had a little bit of trend up in gold. It looks like it's strong. In my view, it may be headed back up to this 34.30. But the question then becomes, do we have the juice? Do we have the strength, the momentum to actually break out and move higher in gold? And maybe more important question for you, Kenzo, is what could get gold to break through these highs? What could get us a strong breakout beyond 3,440 into the 3,500 level? What could get us there?
I think at the moment, Russia US tensions, or let's say Russia, US, and China.
Hmm.
I saw the news. I think they're still going back and forth. Trump also changed the deadline for those days where Russia should actually cease fire or something like that. So I think that will actually push gold to go up because that will mean instability. So once they start to go back and forth, whether they're sending warships or something like that just to scare each other, that is something that it's going to trigger gold to go up because that will mean panic,
Sure.
unless if maybe they reach whatever like agreement or whatever before those deadlines. But at the moment when we see gold playing around, we can see that it's been consolidating for quite some time because Trump gave, I think it's Russia 60 days or something like that, 90 days, I guess. But now he changed, so which means he's starting to get serious and the threats left and right. I think slowly, if we track that, if we track the movement of Trump towards Russia and China, I think that will give us a clear idea of what might happen because I think everyone's just waiting for that, for those days to reach. And if they agree, I'm sure gold is going to sell, or let's say it's going to start to go a little bit lower. But if they disagree and maybe the tensions start to scale up, I think it's where we're gonna see gold fly. So that is going to be crazy, I guess.
Yeah, it is. You kind of represented what's been going on in gold price, which is people are waiting for a more decisive catalyst, right? So it's difficult to try
Mm,
and say, oh, gold is going to go up or gold is going to go down when you don't really have like a very strong. There are times when you have like a list of reasons why. Okay, yeah, this just looks really bullish, or with the indices, it sounds like you're a little bit more directional. Like you're more like, okay, yeah, AI is going, earnings have been good, rate cuts. I'm kind of there with you. It's like that isn't more obvious. You give me a dip in those things, I'm probably going to buy them. With gold, however, it's a little harder for me because yes, you have those geopolitical uncertainties, but we don't have any sort of like hard. In fact, I have some conflicting data that kind of suggests in some ways, that gold is sort of neutral. I have a reading of bullishness on the Edge Finder, but
Mm,
economic data wise, it's a little bit mixed. We're only getting two of our an aggregated two score. What that just means is that there's some mixed stuff, right? So we have inflation that stayed kind of
mm,
sticky, which suggests maybe rate cuts won't be too fast. But then you also have some labor data that looks really weak, so that suggests rate cuts. So there's some mixed
mm.
signals on gold, as well as price action just being very choppy. And to your point about geopolitically, we're sort of in a standstill where you have trade deals that seem to be in a promising direction. That's negative for gold, but you have the uncertainty between the Russia and the US. That's positive for gold. So
Mm.
right now the challenge is just very mixed sentiment in a lot of different ways, resulting in a choppy price action environment in which I've been kind of staying on the sidelines, and I can't really justify taking a big long or short position on gold until we get more clarity one way or the other.
Yes, I think at the moment it's very risky because actually gold excel very well during these times. Gold
Yeah.
likes this chaos and all that. And for now, I think we just have to make sure we understand what's really happening before we jump in. So, but I think it's been clear the market has been ranging or consolidating for quite some time now. So, which means we need a clear, actually a clear direction or
Yeah.
the whatever the updates that are going to come. I think they're gonna give us a proper a way or any direction. But I think at the moment we can see that we had few economic news where the market did not really react to that, especially gold did not really react much. And I was expecting it maybe to go up, like
Mm,
unemployment rate just went up. It was supposed to go up, but it's not really moving that much. So it shows that there is something bigger that it's still waiting for. Actually, investors are still waiting for some bigger news before they act.
sure. Yeah. No, it's a good point. I think sometimes it's okay to just be on wait and see mode. You don't necessarily have to have a trade on all the time. And I say this frequently because there's so many gold traders. A lot of times we feel like because we trade something, we need to be trading it, right? Whereas sometimes you can trade something or be a trader that trades gold and have no position on, and that is a position by itself. Because again, just because your P&L is not moving does not mean that it should be moving, right? Sometimes your P&L should not be moving at all, and you just say, "I'm waiting until I get further clarity on a direction." And this is a choppy chart. That's a tough playground to play in if you are a swing trader, or even really a day trader looking for breakouts. If every breakout, attempt here to the bottom and downside has been reversed, that's really difficult too. So to me, it's just kind of a wait for more clarity and see what happens. And although that is a boring answer to people who, are excited by trading gold, right? Sometimes it's okay to be bored, and sometimes it's better just to wait for proper setups. On what's happening. Kenzo, thank you very much for coming on and pulling over just to make it onto the show. I really appreciate you doing that. For everybody who enjoyed Kenzo's commentary, I know I always appreciate our conversations. You can find his YouTube channel. We're going to drop the link here. There it is, Extra Hot Forex on YouTube. Type it in or click the link that's just been dropped. Do us a big favor here at A1. Make sure to go subscribe to Kenzo. Check him out. See if he, fits your style. If you enjoyed listening to his commentary today, I highly recommend you subscribe to his channel for more content from him. Kenzo, thank you very much for coming on, man, and drive safe.
Thank you very much, and also your viewers.
All right. See you, Kenzo. Good stuff as always. Again, I always enjoy our conversations, and very smart guy. Again, sometimes people hear us talk about something like gold and are like, you guys are just saying it could go up or down. And that is correct, right? So sometimes it's okay to acknowledge that we don't have a very decisive direction. Great traders are not always massively directional on something. Sometimes you can just be neutral, right? Sometimes, in fact, there are even neutral strategies out there. If you're an options trader, you can sell straddles, sell strangles, right? These are option strategies that you can do that are essentially they benefit from the market going sideways or nowhere. I haven't done that on gold, but theoretically, this would have been beautiful if you had sold calls and sold puts in both directions and the market just goes sideways and neither of these bets hit and you just collect profit, right? I do a lot of options trading. I wish I had done it on gold because it would have been a beautiful trade just to stay neutral in terms of a directional bias and collect income for it. But now I'm a little bit more pointed bullish on gold, but the technicals do not align with that, right? So I like the idea of being long gold, and I would be interested if we got some sort of breakout. But until that happens, I'm sitting on my hands and just going to wait for a proper setup. In just a few minutes, we have Marco taking over the show. I'm excited to hear his thoughts. I mentioned this earlier. The earnings report tracker is a tool within the Stockbox. We also showed earlier the institutional tracking tool that we just added. That's under sentiment and positioning. You have institutional tracker. These are all new tools. If you have the Edge Finder and you like stocks or indices, you should get a copy of the Stockbox too. It's a new product. We've been working on it for the last few years. I don't really remember when we first started it, but in the last like 3 or 4 months, we've totally revamped. Like we've totally picked up development of the Stockbox. So I mentioned this earlier, but if you're an existing Edge Finder user, we are currently doing 45% off the Stockbox right now. So if you want access to the tool, send us a direct message right here. You can get access to our institutional tracker, the earnings report tracker. It makes stock data more accessible. That's the biggest thing with stocks is just like Forex, just like commodities, just like economic data. There's so much of it that it seems impossible to track until you have tools that help to bridge the gap. So I mentioned this earlier, but part of the reason I remain bullish on indices is you have earnings that are supporting it. Meta beat their earnings substantially. Apple beat their earnings by a 10% margin. That's not bad. That's pretty good. And when I say beat their earnings, these companies produce like, hey, we think we're going to make this amount of money in this quarter. And then they report numbers that are better than that. Of course, the market's going to say, heck yes, right? That's like saying we think we're going to get 100,000 jobs in the US economy, and then we print 150,000. The world's going to be like, oh, heck yeah, that's strong economic growth. Buy the dollar, buy stocks, etc. So tracking stock data is very important if you're an index trader, if you trade NASDAQ, if you trade Russell, if you trade SP500, if you trade individual stocks. Having stock data in more detail is really important. So that's, like I said, that's been a project for the last few years, and we're at a point where the tool is getting pretty cool. So if you want access to the Stockbox, head over to a1trading.com/Stockbox or click this link to send a direct message to our support team. Guys, we got Marco taking over the stream here in just a few minutes. Marco, if you're good to go a little earlier than 10 a.m., more than welcome to take it on. So it looks like he's ready. Okay, he's good. Okay, guys, we're gonna pass the stream over to Marco. Of course, you guys know him and love him. He's going to be talking setups and trades that he's looking at. Stay tuned. We're going to pass it over to him just after this quick break. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello everyone, welcome to my segment of the stream. So let me check if everything is working properly. I think it should be. I will be on for around 30 minutes. If you guys have any chart requests, any questions, any risk management, psychology, strategy questions, put them in the chat. I have my chat open on the side. So what has been going on today? Well, just to get things started, let me take a look at the DXY, and we're going to take a look at the SPX or the S&P 500. So, okay, we have a lot of comments. Hey, Soccer Boy, GPUSD, sure, Bullet. Hey, what's up, Wesley? Hey, what's up, Wesley? What do you think of US30? J Trades, hello. 11 seconds, good morning. Roberto says, do you invest in stocks? I think that's a question for Nick, most likely. So let me do my quick segment of the DXY and the S&P 500, and then we can get into some chart requests. If you're interested what is going to follow, also on my watch list for today, I have the NASDAQ for buy setups. I have gold to buy, and I have the euro dollar to buy as well. DXY, right now I am a little bit neutral / maybe even a bit bearish. So we have been getting some fundamental data telling us that we may see rate cuts all the way, or maybe as soon as September, right? So rate cuts may be coming in September. That should make the value of the dollar go down. That should depreciate the dollar. Also, you have the story of Trump's big, beautiful bill, lots of spending, increase of the debt, people losing confidence in the US dollar. So things like gold, things like the S&P, things like Bitcoin are much better plays if you want to hold them as a long-term investment instead of keeping a lot of US dollars in your account or in your portfolio. So my bet right now is a little bit neutral. I'm waiting for more data. Next week, we're getting inflation data. Okay, we're getting inflation data. Is it already marked out? Yes, it is. So see, lots of inflation data, PPI as well. That is going to tell us, is inflation still a bit sticky or is it going down? If inflation is going lower, if you get some good inflation numbers, I think rate cuts are definitely going to happen in September, right? Because then inflation is no longer sticky. I'm also waiting for the next NFP event, which is going to be, the next NFP is going to be at the beginning of September. So it will be before the Fed interest rate decision. So we're going to see with that as well. But I think next week, if inflation data is good, I'm going to be bearish on the US dollar. And that's why I'm looking right now. Actually, I'm looking for buy setups on the euro US dollar. But that's more of a play because of the recent strength in the euro. So DXY currently neutral, long-term bearish, waiting for some more data. SPX or the S&P 500, this one I'm really bullish on. Okay, as far as the US stock market goes, I want to play the US stock market through the NASDAQ. So I want to use the NASDAQ because artificial intelligence should have the biggest impact on the NASDAQ, should have the biggest impact on the technology stocks, because the technology stocks are going to be the first ones to implement artificial intelligence and increase their profit margins. So I like the NASDAQ. I like the SPX. I would not look at the S&P 500 at these levels. I would like to get a pullback. I would like to see a pullback to a level of support right here, and then I would look for buy setups. So that's kind of the introduction to what you need to know about the current markets. I think we are in a massive risk on market, as you can see by the stock market. So it's risk on. You do have some tariff drama, some tariff scares, but I don't think it has a massive impact on the markets. So let me look at the comments. So GPUSD. As far as GPUSD goes, I did have a sell setup which ended up a loss. Now, I am pausing on this one. I need to reevaluate the situation. Let me check my Edge Finder quickly. I'm sorry that I cannot bring the Edge Finder on the screen, I'm going to have to put my trading view in my browser, and then I should be able to just have the Edge Finder, have the Forex Factory calendar, everything in my Chrome browser. So on the side, I'm watching the Edge Finder, but I'm not able to share it currently. It's a neutral reading on GBP/USD. I'm neutral. I'm reevaluating this. Again, I did take an initial sell trade. It was limited risk. It was 0.5% of my capital, so not a big position. I did not have massive confidence, but I wanted to take an initial position. And now, because we have moved with such force, and because the story with the US dollar is changing a little bit, so the dollar was really, really strong in the last couple of weeks. See, really, really strong. And then we had a really bad NFP print and really bad NFP revisions, and some other data came out for the US dollar, which came out worse than expected. So the dollar started to lose some value. Because of that, both the pound and the US dollar are kind of neutral / maybe even weak. Okay, so if both currencies are neutral or weak, I don't have a good trading edge. You need one currency to be strong, and you need the second one to be weak. That is what creates trends. If both currencies have the same bias, then you're going to get a range-bound market. Okay, that usually creates a range-bound market. So I am neutral overall on GBP USD. Wesley says US 30. So the Dow Jones. Let's take a look at the Dow. I would say out of all of the indices that come from the United States, the Dow Jones is the least attractive to me. I'm looking at 4 of them. I'm looking at S&P, NASDAQ, Russell. If I had to put them in a tier list, NASDAQ would be my favorite because of artificial intelligence revolution, which I think should follow in the next couple of years. Second one would be the Russell, because it's not at the all-time highs. So there is quite a lot of room for the Russell to go up to the all-time highs. Third one would be the S&P 500, because it is the most popular investment platform or investment instrument in the world. So for sure, it's going to continue grinding higher. And then my last pick would be the Dow Jones. The reason is, I think we are at a critical level of resistance, right? So there's not really a lot of room for the price to appreciate to the upside. And the NASDAQ, we are at all-time highs. S&P all-time highs. Russell, we are not even close to the all-time highs. So there's quite a lot of room. Just 1 second. Okay, so there's quite a lot of room for the price to appreciate to the upside, right? So that is what I'm thinking. I think there are better opportunities in terms of indices, and I think the Dow Jones could struggle a bit and did already struggle at this resistance level. Yes, we may be creating sort of a cup and handle, not a cup and handle, but an inverse head and shoulders pattern, left shoulder, head, right shoulder, which is a bullish pattern, but I could definitely see the Dow Jones ranging around this level like this for a prolonged time. Okay, so that is why I don't really like the Dow Jones. I think it will range around for a bit more unless there is some massive catalyst. Unless there is some really massive catalyst. Just look at the performance of the NASDAQ. This thing is just exploding higher. We're getting earnings as well. I think it is earnings season, and the earnings are doing okay. They're doing pretty well from some of the companies I have seen. So this thing just is destroying all of the other indices. The companies that are in the NASDAQ are so powerful, are so huge, are so big, and are so impacted by this AI revolution that their profit margins are increasing by an enormous amount of percentage. Okay, so Also, you had the news, for example, Microsoft laid off 5% of their workforce, and those guys all got replaced by artificial intelligence. So that's like a 5% boost. Well, not really a 5% boost, but that gives the company better profit margins, less expenses. So it's happening. It's the reality. It's not really the best thing for the workers, but it is the reality that is happening in the markets. So as traders, you're kind of trading the raw numbers, the raw data, and the reality of what you see. That's why a lot of times when there's a war, it will be a spike of volatility into the markets, which traders love. So traders love volatility, and of course, wars are an awful thing. But the reality of wars, trade wars, COVID, financial crisis, recessions, is that they spike and they add volatility into the markets. So it's kind of a dirty sport. The soccer boys still has a bullish bias for the DXY. Well, I'm looking at fundamentals, and the numbers are they are bearish. Okay, the numbers are coming in a bit bearish for the DXY. The latest round of numbers from Friday have not been performing so well. This is not the whole picture. I'm waiting for inflation data. I'm waiting for the next NFP, but we have started to see signs of cracks in the US jobs market. So rate cuts, bearish for the dollar. That's why I'm currently neutral / maybe even a bit bearish, but I'm waiting for more data. Good morning. 11 seconds. Roberto, if you had a question for me, do I invest in stocks? I don't invest in individual stocks. I just buy the S&P 500. J Trades, how's your day going? Pretty good. Yesterday was kind of bad because I took 2 losses, or actually I took 1 loss, and I took a USD CAD loss on Wednesday. But today is a pretty good day. I'm looking for some buy setups, so the markets look okay. I love seeing the stock market go up because I have some investments in the stock market. So Friday is a good day. Quick look on gold. Sure, yep, let's do it. Gold is on the watch list. I like it. There's a bullish reading on the Edge Finder, so the fundamentals for gold right now are bullish, and the macroeconomics, so the overall market environment, is looking bullish for gold as well. What is the reason? Well, first you have crazy Trump. You have tariffs all over the place. You have potentially the continuation of the trade war. You know, last week and this week, Trump had some crazy posts about some new very, very high tariffs. I'm talking India, China, Switzerland, even some EU news, so European Union news. That is not so good for the markets. That creates uncertainty. So deals create certainty. These tariffs create uncertainty, which help gold. Then you have the Fed. You know, the Fed is right now in, there's sort of a politics war going on because everyone wants to be the new head of the Fed. Powell is going to go away. He's going to be replaced right now most likely by, I think, Waller. Okay, it doesn't even matter. It's all noise. What matters is, will the Fed do an interest rate cut in September, or will they wait? That is the only thing that matters. Who is the head of the Fed shouldn't have a massive impact on the markets. It's supposed to be just noise. And that is one of the tough things with fundamental analysis, is distinguishing between what is noise and what is actually going to move the markets. So that is one of the hardest things to do in terms of fundamental analysis. And the whole uncertainty around, let's say, not who is going to be the head of the Fed, but the war between Trump and Powell, and Trump replacing a member of the Fed because one of the members quit. So Trump put a new guy in there. And all of that is creating some added uncertainty, right? In my personal opinion. So you have the tariffs creating uncertainty, and then you have this whole mess at the Fed, and who's going to be the next chairman of the Fed, and what is Powell going to do, and what are the members doing, and do they just want to suck up to Trump so they are voting for cuts? And that should be bullish for gold. I just need to see a breakout. So I need to see a breakout of this level. I have my alert set, and if that does happen, I will be pretty happy to get in on a buy setup. The reason I don't want to take a buy setup right now is basically the same reason that Nick has. It is to not get chopped around this price action. So if I take a buy setup here and the price ranges around, I get taken out. And I take another stab like this, let's say with a tight stop loss. Price goes up, bounces, goes down, takes me out, goes up. So if you're positioning yourself for the continuation of the uptrend, it's not the smartest thing to position yourself inside of a range, because your stop loss is going to get hit a lot, especially if you use a tight stop. So much better to be patient and to lose out on some of the reward to risk, but to have some more certainty that the markets are ready to go up. So waiting for a breakout. I really like gold. I like the fundamental story. I like the macroeconomic story. I like the drama that is happening, and I'm looking for buy setups. Please describe key levels and update us on news. What is current sentiment in US 30? So if you want to talk key levels about the US 30, I'm going to tell you the key level for me personally is this resistance. And until we break this resistance, I'm not going to go near the US 30. Okay, I think the US 30 could range around for quite a bit longer in this area. And I want to get a breakout to the upside. Same thing as with gold. Basically the same thing. You have a very significant level of resistance, and it's going to take a lot of force for the markets to break that level. In terms of news, I think I talked a lot about news. So, and I'm going to continue to talk about it. So just keep watching the stream. I'll continue talking about some fundamentals. J Trades is in gold buys since 3390. 3390. I mean, that's okay. You know, it's your trading strategy. I don't know anything about your trading strategy, so it may be a high probability trade. But for me personally, do I want to get chopped out in this range? Not really. So if you're a scalper, day trader, maybe this makes a lot of sense. I'm a swing trader, so it doesn't make sense to go long inside of the range. Opinion on euro yen. Okay, let's see. Opinion on euro yen. Let me just check something out. Let me see. I'm looking for some buy setups on AJ and NJ, but looks like it's not gonna turn out as I have expected. So euro yen daily. Let's see. Let me check the edge finder as well. I think it's bearish. Last time that I checked, okay, it's neutral. So neutral right now. I personally am neutral as well. I mean, you had a clear uptrend. So you had a clear massive uptrend, and then you had a clear sell-off. Quite a significant sell-off, but that did not really continue, right? Then you had a lot of buying pressure, and now you're getting a lot of buying pressure as well. So this doesn't really give me a lot of confidence to go up or go down. My take is a neutral one. If I was going to look to sell this, I would like to see the momentum continue lower like this. Okay, so I would like to see a big leg of bearish momentum. That is what I would like to see for euro yen for my bias to change. Okay, Euro USD. Yeah, so Euro USD is on the watch list. That is also something I wanted to comment on. Euro USD. I'm actively looking for buy setups. Let me give you my reasoning. So, first, Edgefinder is bullish. Second, Euro is doing pretty well in terms of its economy. The dollar, I'm neutral, but slightly bearish. I'm expecting or I'm looking at the next CPI, the next PPI, and the next NFP, and I'm looking to see about some data that is going to signal rate cuts. Right now, there's like a 90-something% chance we're going to get a rate cut in September. So to take a play on going long on the euro and maybe shorting the dollar, I like euro dollar. I think we are in a massive uptrend on the daily chart, as you can see here. So I do believe this is going to continue to the upside, and I'm looking for buy setups. Also, one thing I like, I'm not buying the highs. I know I was looking for buy setups at this point, but it was definitely overextended. So I didn't want to get in on the highs. Then we got a pretty significant pullback. So now I think the sellers have done their thing. We have had a bit of a pause, and we are possibly ready to continue going up. So I don't think I'm going to get an entry this week or this Friday, but next week I'm going to be heavily interested to look for buy setups. The way I trade, after doing all of this analysis that I just mentioned, I then zoom in on the 1 hour chart. Okay, I zoom in on the 1 hour chart and I look for an entry pattern, either a flag or a break and retest or any other very simple pattern. So next week, I'm gonna definitely be looking for some entry patterns. I would prefer, this is the 1 hour chart, by the way, to get maybe a little bit of bullish momentum, just a little bit. So let's move this a bit higher. Just a little bit of a larger impulse to the upside, and I would be happy to look for buys. So my top pick actually for today is the euro dollar. My favorite currency, or the best currency right now, is the euro dollar to look for buy setups. Gold and the NASDAQ are also on my watch list. Do you think the Edgefinder sometimes gives a late reading? Well, look, it's all about the probabilities. There's no software that is going to be 100% accurate. Every single software or every single strategy or every single methodology or every single trading edge is gonna work in probabilities. So sometimes it will work, sometimes it will not. What matters is that it works most of the time, and the time that it doesn't work, you have a really low risk on the trade, right? So sometimes the Edgefinder will get it wrong. Sometimes it won't be correct, but most of the time, and that's what you need, that is what's called a trading edge. That is what's called trading in probabilities. Most of the time, you're gonna get a reading that is on time, and you'll be able to extract profits from the markets. And that's the only thing you need. If you're looking for a holy grail indicator, well, that absolutely does not exist. What about the USD compared to the GBP? Seems like the GBP is a bit weaker. Yeah, I know. I had a short setup, but I got taken out, so time to reevaluate my position. Okay, I don't want to get in another short. If I want to go short on the dollar, I want to do it on the euro dollar, because I believe the euro is a stronger currency than the pound. Okay, USD JPY. How much of an effect has the CAD news had on the CAD score? I have to check up on that, so I'm not sure about that. Gonna have to do some research. Nvidia's earnings are due out at the end of this month, so being part of the Dow Jones, their earnings depend on how they perform. Could be the catalyst to lift the Dow, possibly. But again, I like the NASDAQ more. NASDAQ has all of the technology stocks. Check on GBPUSD, headline on gold, may affect today's volatility. If you look at Financial Juice, you will see, okay, sure, I'll take a look probably after the stream. Made $300 on gold today. Nice, congrats. Check the oil trade. Okay, JT taken out. don't trade into the Bank of England interest rates. Well, yeah, but I had a swing position. If you're talking about this setup, I had a pretty large stop loss, so I didn't mind holding it even through the Bank of England interest rate decision. Again, my stop loss was 121.4 pips, so I did not mind holding it. If you're a scalper, I would definitely advise, and you're not sure how a specific news event is going to turn out, I would advise closing your position before a major news event. So you are correct, but depends on if you're a scalper or if you're a swing trader. So oil, let me check up on oil. Wow, oil has actually broken this level of support and it's going lower. So interesting stuff. And let me check on Financial Juice quickly to see what kind of news we have on gold. Let's see. So that's supposed to be commodities. Okay, can't see much here. Let me see to the market moving news. Yeah, I can't see much. Sorry about that. I would have to really sit down and go through all of the news. So about oil, let me see the edge finder for oil. US oil, neutral. So we're getting a neutral reading. Max, if you can tell me, okay, so the Russia and the US, the latest thing I can see is US and Russia are set to plan Ukraine deal cementing Russian gains. And oil is dropping because of that. But I'm not sure. Oh, okay, that one. But did you say on gold? That's connected with oil as far as I can see on Financial Juice. So oil on this news, maybe it's here as well, is actually dropping a little bit. In the 1 minute, okay, in the 1 minute. Let me see. On gold. Check it out. Yeah, depending on when it happened. But there's definitely a bigger reaction on oil. So 1608, let's check this one out. Yeah, definitely a reaction, but not so big. Oil had a much bigger reaction. So these headlines for the US and Russia and tariffs, they have a huge impact on pretty much everything, but on US oil especially. US oil is extremely volatile and extremely affected by geopolitics. So I have a tough time looking for positions on oil. I know Nick loves to trade oil. For me, it's just a bit too affected by the geopolitics. So for me, I would rather stay out or maybe look for buy positions because most of the breaking news that you get are not positive. Most of them are negative. And when there's negative news, oil usually goes up. You know, Israel and Iran war right there. So maybe you get a bit of a better edge if you look for long setups on oil. I know Nick squeezed out some profits here, but for me, I'm sticking to what is a bit more simple, more easier, and less affected by the geopolitics. Current bias that I have, well, I can just rely on the technicals. Edge finder is neutral, so the fundamentals for me are a bit neutral. I think we're a bit flat here on the daily chart, and I would not expect for the markets to move much more outside of the range. Right. So in my personal opinion, there are better things to look at than oil. Alexander says USD yen, US 30, Nasdaq 100. I think I did US 30, I did US 30, Nasdaq I covered, or Nasdaq I didn't cover. So that one is left. So why do I really like the Nasdaq? Well, I kind of mentioned it. I mean, artificial intelligence, US economy overall is doing great. Recession is nowhere near. The numbers are coming in pretty healthy. Maybe the jobs market is kind of having some issues, but overall it's doing great. Earnings season, it's okay. So the Nasdaq is my favorite pick. Again, it's flying. You can look at just technical analysis and it will tell you that the Nasdaq is absolutely flying. So I would just like to get a pullback. And yes, we did get a pullback last week on Thursday and Friday, but it quickly went up. So the pullback was not significant enough. The pullback was not big enough for me to look for a setup. That is the reason why I would wait for a bigger pullback. If I don't get one, if the markets decide to go without me, I'll just be patient. So I'll wait for a pullback a bit higher up, but I don't want to hunt the price. I don't want to get at the all-time highs. I can buy here, but then I should have a pretty big stop loss. And if I can get in a bit lower, I can have a much lower stop loss, and I can possibly set a first profit target at the highs. So getting in a bit lower on the Nasdaq, in this case, should be the smarter thing to do, or it would suit me a bit better. It would suit my plan a bit better. Okay. That's just to warn that for scalpers, it may move strongly today. Okay. Oil is quite different. You need the rumors of people who are good on politics and insights. I mean, I'm sure there's traders that specialize in trading oil. I personally definitely don't have any inside information. I'm not really knowledgeable in oil as far as the fundamentals go. And I think there are easier things to trade out there. NBF says, don't be a perfectionist on your entries. It's a balance. It's a balance like everything. If you happen to be too big of a perfectionist, you will suffer because you won't take any setups. If you have no rules, you will suffer because you will take too many trades and you will get into huge drawdowns. So like everything in life, you need to have a balance, right? Everything in life is kind of gray. It's not black, it's not white, it's gray. Trading, more of an art than a science. You definitely need to have a balance in trading as well. So Max says, I personally have a buy on oil, so look to be wrong for now. Okay, well, if you have your reasons, if you have a back-tested strategy, forward-tested strategy, if you have a good trading edge, then let the probabilities play out. You took a buy setup, you have your plan for your stop loss, you have a plan where you will get out of the trade if it goes up. So just stick to the plan and good luck with the position. Even if it ends up being a loss, if you did your homework, it should be just one of the trades. And again, if you take some losses, the sooner you get the losses out of the way, the quicker you will arrive to the winners. So again, at the end of the day, it's all about the probabilities playing out. So you said your stop is way lower. Okay, that's great. 0.25% risk, that's great. That's limited risk. Large stop loss, maybe something like this, below this swing low, that makes sense. So maybe aiming for the highs, positive reward to risk. So yeah, that definitely makes sense if you have a trading edge that backs up this position. But as far as technical analysis goes, some levels I just quickly drew up. If it's a positive reward to risk, quick 0.25% risk, I think that's a good play. And yeah, good luck with the trade. So I'm done. Thank you guys very much for watching. See you guys next week. Good luck in the markets. And next week should be pretty interesting because we are getting inflation data. Okay, so we're getting inflation numbers, which I'm heavily watching. My plan is to see if the inflation is going lower so that we can get those nice, juicy rate cuts. See you guys. Have a great weekend.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.